Okay, we're still looking at this question. We tabulated the cost of manufacturing the goods. Looking at part two, where we have to prepare the trading and profit or loss account for the year ended. Okay, so the trading account, the purpose of the trading account is to get gross profit. Then the purpose of the statement of profit or loss is to get net profit. Colleagues, do you remember from yesterday the difference between gross profit and net profit? I hope we all remember. Do we remember? Mr. Twambo representing the masses, do we remember? Okay. Mr. No, I'm just asking, do we remember the difference between gross profit and net profit? Mhm. Eh, Okay. The gross profit is the profit after you remove the cost of selling the goods, cost of goods sold. To remove that, you get your gross profit. Then the net profit comes after you remove the operational expenses. Okay, the operational expenses. Once you remove those, then you get your net profit. Are we clear? So that next time I don't need to repeat myself. Are we clear with that? Madam Miriam? Okay. Gross profit after you remove cost of goods sold. Net profit, you remove the operational expenses, the selling and admin expenses, the distribution expenses, and the finance expenses. Okay, you have to remove those expenses, then you get your net profit. Those who are doing accounting and finance, as you go in the other years, you're going to hear about profit before interest and tax, PBIT, profit before interest, and the net profit. There are many profits, okay, colleagues? Yes. All right, so we start with the trading account. So, with the trading account, colleagues, all right, remember you always start with your sales revenue. So, we come to information here. Sales, they told us here 200 million. Okay, remember there are three zeros on top here, 200 million, but we just write it as 200,000 so that we don't, we make life easy. I'm sharing it, sir. Mr. Vincent. Log in and how about you? Try to log in and log out. Yes, we'll wait for you. Is everybody else able to see the screen? Okay, we can continue. Okay, so sales revenue 200,000. Okay, yes. If there's any sales return inwards, would have put this sales revenue in the middle here and subtracted the return inwards. But we don't have any return inwards. The next item, okay, the opening stock of the finished goods. All right, here in the trading account, we're looking at now the finished goods. Okay, so we get the opening stock of finished goods. Mhm. Okay. Yes, yes, yes. Yesterday, when we were tabulating the cost of goods manufactured and we're making the adjustment for work in progress. Are you talking about this here? Is that what your query is on, Mr. Casson? Oh, let me get talk time. No, I was kicked out. I was kicked out. My band was finished. Sorry. I was kicked. No, you can hear me now. Can you hear me now? I was kicked out. My band was finished. Okay. I'm here now. I'm back. Can you get me? Okay. Mr. Okay. Mr. Gasono. Yes, you are asking, your question is based on this, yes, what we dealt with yesterday, right? What are you asking? Hmm. No, you add with the 100 because of the, yes, yes, cost of goods manufactured. Yes. So these goods yes. So this 100,000 represents now finished goods also from raw material. Huh? Hello, I never got you. Did someone say something? Oh, okay. Okay. Yes. So, yes, that cost of goods manufactured, those are the goods we turn from raw materials into finished goods. Okay. Yes. So now we're back to the trading account. Okay. And I said here in the trading account, this is what we're going to be dealing with the finished goods. Okay. So we start with the opening stock for the finished goods. These are the finished goods we began with at the beginning of the year. So you can say finished goods stock at 1st January, 5 million. Okay. Then the next item is we're going to include now these goods that we've manufactured. Okay. So that we get the total cost of all the finished goods that we had. All right. 100,000. So when we add this, this is the total stock of the finished goods that we had. Any questions? Okay. Now we need the cost of the goods that were sold, the finished goods, the cost of the finished goods that were sold. So in order to get the cost of the goods that were sold, we're going to get the total cost of all the goods that we had, finished goods, and subtract the closing stock of the finished goods so that we find out the cost of the goods that were sold. Okay. So we're going to say less closing stock of finished goods. So the closing stock of finished goods was 10,000. Mhm. Okay, for starting purposes, yes. 200. PF. Finished goods at 1st January 2008. Okay, so to get the cost of goods sold, the total cost of finished goods available for sale minus the closing stock of finished goods, meaning these are the finished goods we were left with at the end of the year. So the cost of goods sold, COGS, cost of goods sold, 95,000. Mm-hmm. Where I got that figure from? This, which figure again? Sorry. Oh, here, sir, here. Okay. Remember, all this information is going to be given to you in the question. Okay, so you don't need to use funny formulae to get these things unless you are first years. If you are first years, they'll try to make it confusing for you. Do you have another question, Mr. Twambo? Apart from that, before we get our gross profit. Okay. So gross profit, sales revenue minus cost of goods sold, 105,000. That's the trading account. Any questions before we go to the statement, the profit and loss, statement of profit or loss? It's okay, sir. It's okay. Remember, you are representing the people who can speak, so it's okay. This 10, yes, 10,000. Yes, 10 million here, 10 million. Yes, yes. Let me just put it. There are these three zeros on top. I had to put them here. Yes, it's 10 million, sir. Yes. Uh-huh. Is that your question, sir? Okay. Remember, the only things we needed to tabulate, the only things we tabulated here in this is just, I think, it's these two. The rest of the other information is given. Okay. Okay, less expenses. Mr. Chimunya, this is where insurance comes in. Okay. I remember yesterday you limbikilaed for it. So, what about insurance? Here it has come now. Insurance, rent 2,000. Okay, these are the costs which are not attached to the factory. The periodic costs, basically, they're attached to the offices. Okay, I think this is there any other apart from these two? Okay, those are the only two. Yes, so you just total them up. Yes, yes, yes. Maybe let me put it like this in brackets so that you know we're subtracting. I think that it will be better like that. No, here. Okay, yeah, we subtracted here. Yes. Uh, here. Yes. This 105, 200,000 minus 95,000. You get this. Is that okay, Mr. Twambo? Ah, you don't sound convinced. Calculate. Okay. As you are calculating, gross gross profit is sales revenue minus cost of goods sold. Remember selling price minus cost price? Same concept here. Yes. So we get our total expenses. Okay, 1,000 plus 2,000. 1 million plus 2 million, 3 million. Then our net profit is the gross profit minus the expenses. That's the net profit, 102,000. Any questions? Okay, that's why it's quiet. Huh? Okay. Yes. That's yes, the net profit. I'll send you also this document with these answers. I just didn't want to send yesterday. I just sent the manufacturing account minus the. So this will just the income statement because income statement is trading account and statement of profit or loss. Okay. And also we have to put also the balance sheet side. So for the balance sheet, okay, we come to the current assets section. Colleagues, what is a current asset? Mhm. Yes, that has to be used up within 12 months. Yes. And that's yes. Okay. So here, our current asset is our stock or our inventory. Okay. We first include our raw materials, the raw materials we've remained with. Okay. These are the raw materials we've remained with, the ending raw materials. Okay. These raw materials, 31st December, this 6 million. This is the one I'm putting here, 31st December. Okay. We put here 6,000. 6,000. This one here, the stock of raw materials, 31st December, 6,000. Okay, 6 million. Mm. Yeah, okay. Then we have our ending work in progress, WIP. Okay, 31st December. Here, valued at 8 million, but so we're writing just the shortcut here, 8,000. And then the finished goods, 31st December. 24,000. This is the total value of your inventory at the end of the year. It comprises of the raw materials you've remained with, the work in progress that you've remained with, the partially finished goods that you've remained with, and the finished goods that you've remained with.